Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hey Lauren.
Hey everybody.
Hey Lauren, I thought it'd be interesting since with all this media attention on the crisis in Europe and the financial systems with their sovereign debt and the banks potentially failing and needing a huge bailout. Jeremy Siegel, who's a professor at the Wharton School of Business, wrote an interesting piece today about that. It was titled "The U.S. Economy Rises and Europe Sinks."
Right.
I thought it'd be interesting to kind of look at this in a very simplistic fashion about why we still will continue to invest a portion of our clients' portfolios in Europe. And in fact, we'll actually, as the European stocks go down, we'll rebalance and buy more.
Putting more in there. Yes.
That's the classic rebalancing.
Right. Yeah, well, a lot of people have noticed that the foreign stocks have done worse than U.S. stocks this year. There's really no doubt about that. Now, I've been, since long before I started working with Curtis, I've been talking about how important it is to invest internationally. I can't prove this with public statements, but literally since the late 90s, I've been talking about how important international investing is. And in the late 90s, if anybody remembers that time, that was when people thought nobody needed to invest in international, and in fact, nobody even needed to invest in the whole U.S. stock market. You just invest in tech stocks and you'd be able to retire at 20. But that didn't work out for a lot of people, and I don't see any reason to change my views now. But let's face it, foreign stocks have had a terrible year this year compared to U.S. stocks. Maybe not a terrible year compared to other sorts of years, but the U.S. stock market actually had just turned negative again today. By the time you watch this video, the U.S. stock market might be a little bit positive or it might be a little bit negative. But by the time you watch this video, the foreign stock markets will be negative on the year. That's going to be the case. So why do we keep investing in foreign stocks? Well, this is our strategy. At the same time as foreign stocks have had a poor year this year, the valuations on foreign stocks are now incredibly low. Foreign companies are selling at about 8 times earnings, which is incredibly cheap. I mean, the normal thing is 15, 16, or 17 times earnings. An all-time historic low would be something like 5 times earnings. So we could, I guess, reach an all-time historic low. That could happen if the debt crisis gets worse. You never know. And we'll keep buying them during that period of time. That's how we do the exact opposite of what everybody else does, which is buy at the top and sell at the bottom. We buy when things are going down, and we sell after they've gone up. Well,
everybody, when they're going out to buy a car or they're buying Christmas gifts or whatever, they like to get a good deal. Well, they're getting a good deal.
Yeah, that's.
And actually, and I know you and I've talked about this, but back in March of 2009, the U.S. stock market, when the Dow was hovering around 6,500, there was certain indexes that the prices were about 8 to 9 for U.S. stocks.
Yes.
Nobody was saying to buy U.S. stocks at that time. That was the ideal time to be buying.
And March, that was one of the best months in the history of the U.S. stock market. I want everybody to remember that, if you look up all the best months in the history of the U.S. stock market, half of them happened in the Great Depression. It's precisely when the economy is at its worst that you get the best months in the stock market, because that's when the economies turn around. We have no idea what's going to happen in Europe, but in the long run, this stuff will get worked out, and that's why we are buying foreign stocks now.
Along with, though, we keep a huge presence in U.S. stocks, a huge presence in Asian stocks. We're global, so it's not just Europe.
That's exactly right.
That's right. All right, well, thank you for watching this episode of Erickson TV, and we'll see you next time. Bye now.
See you next time.